Everybody. I want to welcome everyone to this training seminar here on how to use this MACD system that we've been talking about to be able to profit in the Forex market or potentially profit in the Forex market. I want to start off by saying that, as any strategy, they should be taken, analyzed, back tested, and used as a tool to integrate in with your trading already. I don't believe that anybody should just take a product and not understand how it works and apply it in the Forex market. I think that's why a lot of traders lose money, because they're not knowledgeable on what exactly they're using. So we're going to try to start this thing with the foundation of what MACD is. MACD is a very simple indicator. It's been used in the markets for quite some time, and it simply stands for moving average convergence and divergence, guys. There's nothing major to this. It's simply moving averages and a divergence or convergence of those moving averages, which is simply the difference between the two. So basically what this is, in all actuality, is a great momentum indicator. It can tell you trend. A lot of people use it for trend as a lagging indicator. But we're going to focus on today how to kind of use it as a leading indicator, which is the looking at it from the momentum side of things, and simply looking at the chart patterns that this thing will create in a market where you have momentum. First of all, the foundation of the MACD is based on two exponential moving averages, guys. And what exponential moving average is it is a moving average, which is simply a formula or an average of however many periods you're calculating. So a 10 period moving average would be your last 10 candles of data. Okay, if you're on a 15-minute chart, it'd be your last 10 15-minute candles. If you're on an hour chart, it'd be your last 15 hours of candles. So depending on which chart time frame you're looking at, that's the periods that you're looking at. And you can look at any period on a moving average you like, and it simply takes those periods, adds them up high to low, and averages them out into how many periods there is. So it's very simple at its core. Now, an exponential moving average is weighted, meaning that the more recent price action is given more weight in the formula than the older price action. So newer candles are taken into account more so than older candles. So you're going to get a quicker reaction on newer price action than you would on just a simple moving average with an exponential moving average. So that's pretty much what this indicator is based on. Now, it's based on the time frames that our standard MACD setup is based on, is a 26 EMA and a 12 EMA. And these are going to be your lines that you're looking at here. It's going to be an EMA line and a trigger line, and we'll get into that in a little bit. That's not really our focus of this system here. The main focus of the system that we're looking at is we're going to show you how to use MACD as a momentum indicator and looking for signs of reversal from that momentum. A lot of people look at crossovers on the MACD like this right here. Look at to actually roll over. Another thing that people like to look at is the rollover here. Okay. Now, if you look at when this actually rolls over, you'll see the price action is about right here. And you still got downward movement after that. But we're going to show you how to get in at the top, up in this range, from using the MACD indicator as well. Alright, so we're going to start off by focusing on pattern recognition. Okay, this is very important to this specific system, is pattern recognition. First and foremost, the way the MACD draws out this area right here, which is the histogram. Okay, this histogram is simply plotted based on the two moving averages. Alright, so as they pull apart from each other, And remember, we're dealing with a 26 and a 12 moving average. So as the 12 pulls away from the 26, depending on which direction it's pulling, that plots this histogram right here. If we have it